Good day, ladies and gentlemen. Thank you for standing by, and welcome to the ACM Research Second Quarter 2025 Earnings Conference Call. Currently, all participants are in listen-only mode. Later, we will conduct a question-and-answer session, and instructions will follow at that time. As a reminder, we're recording today's call. If you have any objections, you may disconnect at this time. Now I will turn the call over to Mr. Steven Pelayo, Managing Director of the Blue Shirt Group. Steven, please go ahead.
Thank you. Good day, everyone. Thank you for joining us to discuss second quarter 2025 results, which we released before the U.S. market opened today. The release is available on our website as well as from our newswire services. There is also a supplemental slide deck posted in the investor section of our website that we will reference during our prepared remarks today. On the call with me today are our CEO, David Wang, our CFO, Mark McKechnie, and Lisa Feng, our CFO of our operating subsidiary, ACM Shanghai. Before we continue, please turn to slide 2. Let me remind you that the remarks made during this call may include predictions, estimates, or other information that might be considered forward-looking. These forward-looking statements represent ACM's current judgment for the future. However, they are subject to risks and uncertainties that could cause actual results to differ materially. Those risks are described under risk factors and elsewhere in ACM's filings with the Securities and Exchange Commission. Please do not place undue reliance on these forward-looking statements, which reflect ACM's opinions only as of the date of this call. ACM is not obliged to update you on any revisions to these forward-looking statements. Certain other financial results that we provide on this call will be on a non-GAAP basis, which excludes stock-based compensation and the unrealized gain and loss on short-term investments. For our GAAP results and reconciliation between GAAP and non-GAAP amounts, you should refer to our earnings release, which is posted on the IR section of our website, and to slide 13. Also, unless otherwise noted, the following figures refer to the second quarter of 2025, and comparisons are with the second quarter of 2024. I will now turn the call over to David Wang. David?
Thanks, Steven. Hello, everyone, and welcome to ACM Research Second Quarter Earnings Conference Call. We deliver another quarter of good results with strong sequential growth in both revenue and shipment, reflecting continued progress across our expanding product portfolio. We saw momentum from our SPM, Tahoe, plating, and furnace tool, which are helping expand our addressable market and gain market share. We also continue to make progress with new platforms, including track, PCVD, and panel-level packaging tools, which represent important long-term growth drivers. We recently announced a major upgrade to our Ultra C WB wet bench cleaning tool. The technology integrates ACM patent-pending nitrogen bubbling technology to generate a large-sized bubble with good bubble density uniformity and enhance the etching rate uniformity in a 3D structure across the wafer. I'm happy to announce that we have received repeat orders for the new Ultra C WB wet bench tool with our proprietary N2 bubbling technology. We expect good shipments for this tool this year and next. The technology is also adaptable to our Ultra C Tahoe platform, with significant application potential for manufacturing advanced 3D NAND, 3D DRAM, 3D logic devices. We believe this new technology is another example of ACM's leadership in cleaning tools that will be good for our customers and support our growth initiatives. Our nitrogen bubbling technology tool adds to early breakthrough for Tahoe and other recent product launching, such as our high-temperature SPM tool and panel-level packaging tool for flux clean and the bevel etcher. Together, these developments reinforce ACM's differentiated leadership in wafer cleaning and give us confidence that we will continue to gain share in a critical segment. We remain committed to deliver innovative new products such as this to enable our customers to meet the next generation of semiconductor manufacturing challenges as demanded by the artificial intelligence transformation. Now, onto our business result. Please turn to slide 3. For the second quarter of 2025, we delivered revenue of $215 million, up 25% sequential and 6% year over year. Shipments were 206 million, up 32% sequential, up 2% year-over-year. Gross margin was 48.7%, exceeding our targeted range of 42 to 48. We ended the quarter with a net cash, 206 million. Now I will provide a detail on product. Please turn to slide 4. Revenue from single wafer cleaning, Tahoe, and semi-critical cleaning tools grew 1% and represent 72% of total revenue. We believe our top-to-bottom cleaning portfolio put us in a strong position. We continue to make a technical improvement and the customer progress with our SPM tool. Our high-temperature SPM system features ACM proprietary nozzle design, which prevent both liquid SPM and acid mist spat out of the chamber during the SPM process. This improving particle performance, reduce chamber preventative maintenance, cleaning frequency, and enhances system uptime. We have achieved better particle control over average particle count, less than 10 at this 26 nano particle size. We also believe it will show better performance than competitors offering at a particle size more than 17 and 15 nanometer. In Q2, we deliver SPM and Tahoe tools to several more customers as we continue to gain market share in SPM space. Revenue from ECP, furnace, and other technologies grew 23% and represent 22% of total revenue. ACM recently delivered an ECP tool to a customer, which included company's 1,500th electroplating chamber shipped. We are seeing a strong momentum for our ECP tool in advanced packaging, driven by demand for both front and back-end plating system. We are also seeing growth interest in our new Ultra ECP APP panel level horizontal plating system. As the industry shifts from wafer to panel level packaging to support the next generation AI chips, our unique horizontal plating approach, which delivers superior uniformity than vertical panel plating solution, has attracted attention from the major players. Our furnace product are building momentum, supported by strong customer interest and expanded pipeline of evaluation and their engagement. We see good demand across multiple applications, including high temperature anneal, especially our 1250 degrees C version, high temperature anneal furnace, and also LPCVD, oxidation, and ALD. We believe ACM differentiated design position us to capture meaningful market share. Revenue from advanced packaging, which exclude ECP, but including service and spare, was up 20% and represent 6% of revenue. We are making good progress with our new track and PECVD platform. Our proprietary PECVD platform with 3 tracks per chamber give us flexibility to support a wide range of process with the same hardware. We feel good about our positioning with a plan to deliver more beta tool to a handful of customers this year and look for revenue contribution in 2026 and beyond. For track, we're in the final development phase of our 300 wafer per hour inline KF tool, and we expect to deliver the beta tool to a key customer in the current quarter. To close on product, our roadmap, including incremental contribution from Tahoe SPM and the furnace tool in 2025, with the panel level packaging, track, and PECVD tool expected to drive growth in 2026 and beyond. Please turn to slide 6. Our first half result reflects solid execution across our product portfolio. We remain confident in the year and our long-term opportunity in China. As a result, we have increased our long-term revenue target for mainland China to $2.5 billion versus our previous target of $1.5 billion. The increase is based on 2 main factors. First, we now assuming a long-term China WFE market size of $40 billion versus our prior assumption of $30 billion. This is based on updated by third-party global market forecasts and also our view of the China semiconductor industry. Second, we have adjusted our market share targets for product group as follows. We have raised our market share target for both cleaning and plating to 60% versus 55% prior. This is a result of our current assessment of a customer traction and increased confidence for share gain for new product. For furnace, PCV and track, however, we're keeping our target at the 15%, and 10% level. Of course, we aspire to achieve better result, but need more time in the market before we will formally adjust the target. Moving to the bottom of the chart, we maintain our revenue target for the rest of the world at 1.5 billion. We believe ACM focus on differentiated world-class product, combine our global sales and service team will deliver result with our global customer. As an example, we have a plan to deliver a server tool to the U.S. in the third quarter. We remain engaged with our major U.S. customer with active evaluation across a range of the cleaning process steps as we continue to work towards our goal for production orders. Bottom line, we have raised our long-term revenue target to 4 billion versus our prior target of 3 billion. Now, I will provide update on ACM Shanghai's proposed capital raise in China. ACM Shanghai recently received approval from the CSRC to proceed with its proposed follow-on offering on the stock market to raise up to $620 million by selling less than 10% of the total share. The capital raising is intended to help accelerate our updated revenue target and add to the long-term foundation to support our effort to scale our product to major global customers. As the majority shareholder, we view the proposed transaction as an important step in strengthening our position in the China market, and it demonstrates the long-term value of our ownership stakes. Next, let me provide the update on our production facility. First is Lingang. Please turn to slide 8. As I discussed last quarter, our state-of-art Lingang production and R&D center is nearly completed. The site including 2 production buildings, with the first now in production and the second available for future expansion. Each of the 2 production buildings can support up to 1.5 billion of annual production capacity. Combined, we believe we can eventually support 3 billion of production at Lingang from the 2 manufacturer buildings. Next, our Oregon facility. Please turn to slide 9. Recall, we purchased a 40,000 square feet facility last year. We made good progress during the second quarter, and we have begun upgrade on our customer demo R&D lab. We believe this will help our effort with the customer in the region as it will let them test wafer locally on ACM tool. We also are moving forward with a plan to add production capacity to the Oregon facility. We target the middle 2026 for the demo lab and production to commerce operations. Our investment in Lingang and Oregon are key enabler of our growth strategy, expanding our capacity, strengthening customer support, and prepare us to scale globally. Now I will provide our outlook for the full year 2025. Please turn to slide 10. We're maintaining our 2025 revenue outlook in the range of $850 million to $950 million. This implies 15% year-over-year growth at the middle point. In close, our focusing remains on delivering differentiated, enabling technology that solve our global customer most critical process challenges. Now let me turn the call over to our CFO, Mark, who will review the details of our second quarter results. Mark, please.
Yeah, thanks, David. Good day, everybody. Please turn to slide 11. Unless I note otherwise, I'll refer to non-GAAP financial measures, which exclude stock-based compensation, unrealized gain loss on short-term investments. Reconciliation of these non-GAAP measures to comparable GAAP measures is included in our earnings release. Also, unless otherwise noted, the following figures refer to the second quarter of 2025. Comparisons are with the second quarter of 2024. I'll now provide the financial highlights. Revenue was $215.4 million, up 6.4%. Total shipments were 206 million versus 202 million in Q2 24 and 157 million in Q1 of 2025. Strong sequential rebound in Q2 shipments led to a return of positive year-over-year shipment growth for the quarter. Gross margin was 48.7% versus 48.2%. This exceeded our long-term business model target range of 42 to 48%. We expect gross margin to vary from period to period due to a variety of factors, including sales volume, product mix, and currency impacts. Operating expenses were $63.4 million, up 38.8%. R&D was 14.5% of sales. Sales and marketing was 9.3% of sales, and G&A was 5.6% of sales. For 2025, we now plan for R&D in the 14 to 16% range. This is an increase versus last quarter's plan due to ACM's continued focus on proprietary R&D programs. We plan for sales and marketing in the 8% range and G&A in the 5 to 6% range. Operating income was $41.5 million, down 20.2%. Operating margin was 19.3% versus 25.6%. Income tax expense was $1.9 million versus $9.3 million. For 2025, we expect our effective tax rate in the 10% range. Net income attributable to ACM Research was $36.8 million versus $37.5 million. Net income per diluted share was 54 cents versus 55 cents. Our non-GAAP net income excluded $9.8 million in stock-based compensation expense for the second quarter. I will now review selected balance sheet and cash flow items. Cash, cash equivalents, restricted cash, and time deposits were $483.9 million at quarter end versus $498.4 million at the end of the first quarter. Net cash, which excludes short-term and long-term debt, was $205.8 million versus $271.0 million at the end of the first quarter. Total inventory net was $648.3 million versus $609.6 million at the end of the first quarter. Raw materials was $285.6 million, up $45.7 million quarter on quarter. We made strategic purchases to support production plans and to mitigate any potential supply chain risk. Work in progress was $60.7 million, down $10.2 million quarter on quarter. Finished goods inventory was $302 million, up $2.2 million quarter on quarter. Finished goods inventory primarily consists of first tools under evaluation at our customer sites, along with finished goods located at ACM facilities. Cash flow used by operations for the first half of 2025 was $39.6 million versus $51.9 million cash flow provided by operations in the year-ago period. Capital expenditures were $32.2 million for the first half of 2025 versus $39.7 million in the year-ago period. For the full year 2025, we expect to spend about $70 million in capital expenditures. That includes our prepared remarks. Now let's open the call for any questions that you may have. Operator, please go ahead.
Thank you. To ask a question, you'll need to press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Please stand by while we compile our Q&A roster. Your first question comes from the line of Charles Shi with Needham & Company. Your line is now open.
Good evening, David and Mark. First question on shipment. I noticed that the shipment was up, but only up slightly on a year-on-year basis. I recall you guys previously said the full year 25 shipment should grow. Maybe not necessarily growing faster than revenue this year, but that should grow. But it looks to me that in the second half of the year, you have a good amount of catch-up to do for shipment to be flattish versus last year's level. Is it still the right target to think about shipment, or maybe the full year number may actually come down a little bit on a year-to-year basis? Thank you.
Hey, Charles. And our 2024 shipment was very strong, right? You recall about the, over 2023 is 63% of the increase rate. So then we also have a lot of new product, and this year we're contributing to the shipment this year. So I want to say the second half year, obviously much stronger than the first half of the year. We're expecting still growing for 2025, and growth is still achievable.
Got it. So relative to, let's say, 90 days ago, the expectation for shipment for this year, do you see actually its shipment growth may be stronger than you thought 90 days ago, or flattish, or weaker? Any direction or color you can provide? But the reason why I ask this, maybe it's good to get your thoughts as well. Your U.S. peers who have reported so far ahead of you have been seeing China WFE upside, especially for the second half of the year. Wonder if you're seeing the same thing or not. Thank you.
Yeah, I should say our Q3 is very strong, right? We see the Q4, and there's still some slot we're going to fill in. And so I still see the very good and outlook for Q4. So I want to compare, like you said, 90 days ago, we see that the market situation going to improve.
Got it. Lastly, I think, Mark, you mentioned some strategic purchase you made over the last quarter. I think the news flow did suggest that the U.S. may be working on something in terms of export control at the subsystem level. Wonder what's the ACM assessment on, let's say, supply chain risks, maybe for the reasons of potential new export controls, and how the company has prepared to mitigate that risk. And any thoughts on that front would be great. Thank you.
Yeah, David, do you want to take that first, and I can add, or do you want me to go ahead? Yeah, go ahead.
Sure. And obviously, now we're doing the multi-source of the components, right? And we're definitely looking for the new components and supplier in the other country, and then the U.S. And also we have looking for the local supplier in the mainland China. And I want to say there's a certain challenging, however, and I think we can overcome that with the multi-source, alternative source supplier for our key components in the tool. So, Mark, you want to add on that?
Yeah, Charlie, the only thing I'd add, I think it's a good question. It's something that we look at a lot. I mean, it's we have a pretty good solid balance sheet. We have a good forecast for our shipments, so we thought it was the right thing to do to kind of increase some of our strategic supplies of some key components. So we might even do a little bit more here in the second quarter. Yeah. Or I'm sorry, in the third quarter.
Yeah. Yeah, maybe just a quick follow-up, because the strategic purchase, it could be for preparing for a higher demand in coming quarters, or it can be more for mitigating supply chain risks, especially let's say, maybe some of the components you are sourcing currently from the U.S. Which one is it more for you to motivate you to do that? Yeah.
Yeah, I mean, as of January 1st, you can't get parts from the U.S., right? So yeah, these are strategic purchase probably from other regions, and I won't really break out, how much of it is to mitigate the risk or just kind of based on our forecast, but it's a combination of those, Charlie. Yeah.
Yeah, thank you, Mark. I really appreciate the insights. Thanks.
Yep, you bet. You bet.
Thank you, Charles.
Thank you. Your next question comes to the line of Mark Miller with The Benchmark Company. Your line is now open.
I had a question about long-term borrowings. They're up significantly over the last 6 months. I'm just wondering what's going on there.
Yeah, I can hit on that a bit, and then we got Lisa here in the background. But long-term borrowing, we did step things up a bit. There's controls over how we can use some of our capital from the China capital raise and what have you. Of course, we have that coming along, so we did step up our long-term borrowing a bit here in the first half of the year. Lisa, did you want to add something?
Yeah. In addition to that, the interest rate for deposit is much higher than borrowing in China. So we're trying to using that kind of leverage to maximize the return.
Good opportunity to kind of take the lower interest rate down.
Right.
Yeah. Thanks, Mark. Yeah.
Okay, thank you.
Next question, please, operator. Yeah.
Yes, thank you. The next question comes from Suji DeSilva with Roth Capital. Your line is now open.
Hi, David, Mark, Lisa. Congrats on the progress here. So milestone-wise, can you talk about the customer traction outside China and what some of the milestones we would look for here, update on the customer base across different parts of the world?
Outside China, right?
Outside.
Yeah. Yes. Hey, Suji, and I think we're continually work with a key customer in Korea and also in the U.S. And this moment I want to say is it take a little more time. However, we're really working closely with the key customer, evaluate our differentiated cleaning technology and our megasonic cleaning, and we are reaching a very encouraging result. Also, we're working with a Korean customer for their copper plating product, and that also made a progress, right? And continuing, we're also exploring new customer in both U.S. and Taiwan. And I think especially our I want to say our panel level and packaging tool made a very strong attraction, right, from Taiwan customer too. So I want to say with our continued innovation and technology we're providing the market, and we're going to have our expand our sales revenue outside China, especially we're now building our R&D center in Oregon, and also their manufacturing, and this R&D center will make it easier and for our cleaning copper plating demo and for the customer outside China, and also manufacturing we're doing right now prepare for the Oregon, and that's really give us a strong position and to real minimize impact of any tariff situation. So we believe our strategy, building our R&D manufacturing center in China, in Korea, and the U.S. Will further strengthen our position in the global market. And we're fully confident with our new differential product, and also I want to say a lot of new future AI chip request, a lot of new technology, which is even today nobody offer in the market, and those new demand for the technology driving will really put ACM's product in the differential or the position. So we believe with our innovation continues going on, and we'll continue gain attraction from the key customer in cleaning, in copper plating, and panel, and also other new product we're planning too. So we still have very strong confidence, right? We're getting to the global market. I still want to say every customer in the world, the demand for the best technology, right? As the way this meeting announced, we have a N2 bubbling technology with generator large size N2 bubble with uniformity across the entire wafer. in the past. So we believe that's what really driving their innovation requirement and for their both 3D NAND and 3D DRAM in the future, probably also the 3D logic down the road. So that's another word I look at their our innovation technology or bring to the market. Okay, Mark, you want anything to add on that?
Yeah, no, David, I think that was a good answer. I mean, we're working really hard with our big U.S. customers. We got some additional tools that are going to different organizations here in Q3 to the U.S. So our team is pretty active in Oregon. We're pretty focused on getting our demo room up and running and being ready to produce tools in the U.S.
Hi, Suji.
Yes, thank you. The next question comes from Edison Lee with Jefferies. Your line is now open.
Hey, David and Mark, how are you? Can I maybe ask you two questions? Number one is for the 2Q growth at the revenue level is 6%, which is actually below the growth rate that you are guiding for the full year. So what was actually driving that lower growth in the second quarter? And then for 3Q, you said that the outlook is very strong. Can you share the growth drivers coming from logic, memory, power, and advanced packaging? So which areas actually you are seeing the strongest growth and which area you are seeing the slowest growth? Thank you.
Yeah, I mean, revenue can be lumpy, right? And we're still expecting 15% middle point growth for the year. And also, you're asking the Q3 driving force, I want to say still our cleaning and the cover plating is still the major driving there. And also certain product, customer requests where, shipping turn to Q2 to Q3, right? I want to say over the year, we still have whole year, we're expecting growth. Better than the Q2.
Okay. Right. So in China, can you talk about the growth that you're seeing from memory versus logic?
I would say we both our tools sell to the memory and the logic customer, right? But you would say which is grow faster? I don't have a real number right now putting in my hand. I want to say both. Even looking there, long run, I want to say memory is still very strong, both the 3D NAND and also this DRAM business. And of course, there's logic and the people are still building fabs and both for mature nodes and also advanced nodes. And so I want to say that looking at the next really a few years, those market is very solid, still there.
Okay, great. Thanks, David.
Thank you.
Thanks, Edison. Yeah.
Thank you. As a reminder, to ask a question, you'll need to press star 11 on your telephone and wait for your name to be announced. Your next question comes from the line of Matt Cook with Portento. Your line is now open.
Hey, David. Hey, Mark. How's it going? Can you hear me okay?
Hey, Matt.
Yes.
Good. Great. So I just wanted to ask, ACM Shanghai reported its results about 60 minutes ago. Now, I know that there are different accounting standards, but their numbers look a lot better than yours. Like the difference is bigger than we're kind of used to. So revenue was $270 million compared to $215 million for ACMR, and adjusted net income was $62 million compared to about $37 million that you just reported. So Mark, could you just help understand what's caused the difference? I know there are different recognitions on revenue and timing. That's the first question, why the results are so much better there, and if there could be some kind of if that could swing the other way in Q3. And then the second question is, are shipment numbers different for ACM Shanghai? And if so, what are they in dollars? That would be great. Thank you.
Yeah, David, I can go ahead and hit that, and you can add if you want. So, in reverse order, yeah, I mean, simply the shipments are the same for both. They're measured the same. The difference is rev rec, and so under China GAAP, the China organization recognizes revenue upon installations, and of course, U.S. GAAP is 606, right, where we take revenue on repeat shipments or upon acceptance when it's a first tool shipments. So just a timing difference in the rev rec standards. And this quarter was a little bigger than it had been in the past. I think it could be kind of a result of some of the bigger shipments that we had last year that it took a little long, the timing of the installations here in Shanghai. And we won't really guide how that's going to change for the back half of the year. Q3 and Q4. I don't think we're going to give any specific details on that.
Yeah. Yeah. I want to add on that.
Okay.
You're looking at the long run. This two numbers should be matching, right? But looking at quarterly base, you get sometimes U.S. is higher, sometimes Shanghai is higher. So that's, as Mark mentioned, different recognition of the revenue. So I want to say overall, like you said, the Shanghai number looks good, but that's only quarterly base, right? And I want to say a whole year, I mean, or long run, this number is very matching.
Hey, Matt, one other thing I could bring out that I think will be important is that the U.S. GAAP and the R&D side, we don't capitalize anything, right? So it's all expensed. And so there is some capitalization of R&D. I don't know if they give out the exact mix, but that's the big differences on the operating expenses. That's one. And then, of course, ACMR, the global operation, we've got our cost of being a public company, and then we also have our sales and marketing effort that are incremental expenses. Yeah.
Helpful. Thanks very much.
You bet. Thanks, Matt. Yeah.
Thank you.
Next question, operator, please. Yep. Operator, next question, please. I think we lost the operator here. Charles, do you have a live line, Charles? I see Charles Sure is live as a Q&A.
Yes,
yeah.
Excuse me.
Yeah, thank you.
Your next
operator.
question comes to the line of Charles Shi with Needham & Company. Your line is now open.
Yeah. Yeah.
Hey,
Thank
Charles,
you. Hey, can you hear me?
Yes, Charles, I can hear you.
Yeah, I feel obligated to ask a question about the long-term target. I think it's important update, but I have a really question on the mainland China portion of the long-term projection there. I think one key change versus your prior target was the mainland China WFE market size. You kind of raised it from $30 billion to $40 billion. It does match with where China WFE numbers were trending over the last couple of years. Last year, I believe it's slightly above $40 billion. This year, maybe around $40 billion. But I think my question is, would there be any concern, I mean, by the team, maybe you are a little bit extrapolating the peak China WFE number there from the last year's peak run rate level into the future, or with the confidence on China WFE maintaining at this $40 billion level over the long term? Thank you.
Okay, Charles, obviously, year over year can be kind of a changing, right? Maybe 5-10% up and down. And I want to say our long-term revenue is not for next year, right? It's like a 5-year or that timeline we're talking about or beyond. So we believe that year, China WFE market will be $40 billion. That's what we talk about a long run of the goal. And you look in the expanding in China of the either memory or the logic or including IGBT, it's a lot of demand here. So that's our confidence. We believe that the market 40 billion, you look in the 5 year down the road should be that number. Of course, their global market growth too. So there's a 40 billion we think is a reasonable target we put there. And second one I want to see that is we do have also a new product coming in, and we're through last 3-4 year R&D, our furnace, PECVD, and the track, or including our latest panel level packaging tool, getting into the the market and or start to generate revenue either this year and also next year. Second, I want to mention that is we just get approved, right, from CSRC, and we'll have second fund raising more than $600 million. Those fundraising that will help ACM to accelerating our the target R&D, and so that will be another big factor. And third one I want to mention that is ACM has been really in China market insist all the differentiation, innovative technology, and to the market. And so I believe Chinese the customer still like the best technology with IP protection. So that really put ACM very unique position. And this moment we have not found any local Chinese company and copy our IP, infringe our IP. So we have a very confidence ACM can maintain our differential product margin. And also, as I said, customer locally is real design the best technology, which is we are providing a differential solution. So we're much better than those people provide their similar product. As since I said, we're providing differentiation. That's what's solving the future needs, and for the customer. So with all three automation, so we're very confident. That's why we're raising this China market from 1.5 billion to 2.5 billion. Thanks.
Yeah, thank you. I appreciate the wonderful color. Glad I asked.
Thank you. Your next question comes to the line of Jimmy Hang with JP Morgan. Your line is now open.
Yeah. Hi, David, Mark. Can you hear me?
Yes, please.
Yeah, thank you. So I want to ask about whether you have any source of visibility into 2026. And actually, can you also share about your estimate on the China WFE for 25 and 26, either absolute numbers or YOY comparison? Thank you.
Yeah, well, I mean, looking at 25, and obviously, different report, right, show different results. And looking at Gartner, they're pretty like in lower. But you have another IC Semi, they're try also, show their very, I want to say, different result. In other words, it's better than the Gartner. I mean, you look in 25, 26, I'm still hard to predict maybe, 10% up and or down, right? But for our feeling is doesn't matter. As I said, China market still exists. They already reach about either 30 or 35% of the global number already. So with our differential technology, with a new product come out, and even the flat of the revenue or the WFE spending in China, we're still expecting our growth and also high growth. As I said, our new product, PECVD, and we have a few customer, handle customer coming to their evaluation this year. We'll also put our 300 WFE wafer per hour KF line, and which is in line with the scanner will ship out very soon, probably in Q3. And also added a new technology, as I mentioned, a panel level packaging, as attraction. And plus, we have this high temperature anneal, 1250 degrees C, and that's really can real shorten the anneal time for the IGBT, also other critical application. So as I said, all this new product we put in the market will give us a strong confidence where we have a growing fast, even with the flat or Chinese WFE market. as I mentioned, just answer Charlie is we offer a China market with a real differentiated product, and we feel confidence we can protect our IP, and therefore we can have our I want to say margin maintained and give the customer best the choice, and so we're not getting into that kind of similar product in price competition. And as I said, the Chinese customer still demand for the best performance. If they're choosing performance versus price, of course they're choosing performance. And so that's why our differential product can offer such a superior, better result than those people provide a similar product, right? So we think that will be our strong point.
I see. Yeah, thank you, Dr. Wang.
Yeah, if you don't mind, I might just add a few things on that. Obviously we're not going to, we don't give our guidance for 2026 until early in the year, but you probably noticed our OpEx was pretty strong this year relative to our revenue. Even if we do the midpoint, it's still kind of we're growing our OpEx this year. And a big reason is we're spending into the market opportunity, right? I mean, David mentioned a lot of the new R&D projects. We're also spending more on sales and marketing, but clearly that spending is, kind of anticipating good growth ahead.
Yeah, I'll add on that, compared to the first tier guy, their R&D probably 10 to 12%, right? And we'll spend 14 to 16%. And that's really show our, having invested R&D. Also with our new product come out in a speed, and we have more, I call the product, a new product common ratio compared to, first tier global guy. And that's why it show that our spending is higher. So that's why we're investing in R&D and also sales and marketing, and that's really supporting our next 5-year growth. And we believe we spend this operation spending. It's very important and also supporting our long run growth.
Yeah, thank you, Dr. Wang and Mark. Also want to ask about the cleaning equipment market share target you led to 50% in the long run in China. Do you think in that case, what will be the split of the remaining 40% share between other Chinese peers and international suppliers? Yeah. Wow. Can you get 60% market share in China? Yeah.
It's hard to divide who is the second, who is third, right? I mean, again, we're trying to be number one in China, of course, right? Why I say that is our now product portfolio really almost can match 95% of our cleaning process staff. So we're probably the widest product in the world, compared even the 3 big guy in global international, right? And also, as I said, our product has a lot of differentiation, and pothole tool and SAPS, Maxonic, TEBO, and the non-violation or non-damaging, Maxonic technology. And also continue adding this recent announced the N2 bubbling, right, with a special proprietary design, generate a large bubble size with uniformity. So we're continuing really not just our product widespread, also have another innovative approach in the better than those top tier in the world. Especially I want to mention also SPM. Our SPM, as I mentioned, we have new proprietary nozzle design, can real limit all the liquid splash or acid mist out of chamber, and that really can improving and the small particle performance. And today, as I said, 26 nano, we're reaching average almost 5, in the particle, and we believe with improving the chamber environment, and we should get a better result in the 15 nano, 17 nano, which is real advanced, next step. So particle. Anyway, I want to say, we're do our, again, differential approach and with IP protection, and that's the strong point. And we're expanding China market, and also we're not facing any, as I said again, we got a very strong IP portfolio in China and globally. Also, we do not expect any local Chinese people can copy our tool. So that's a real strong confidence, and we see we're expanding in the China market. Of course, with those differential product tests in the China market, we'll push to the global, right? As you know, the cleaning has been more and more important and for the future AI chip manufacturing because of yield suffer. So this cleaning become more and more challenging for 3D NAND, 3D, DRAM down the road, and also 3D logic. Eventually, people will see that. So all the 3D cleaning, we do have a product, technology ready for that. So we're very, we're very excited. We're very, and kind of see our technology, going to spread out in all the global market.
Yeah, I see. Thank you, Dr. Wang. Maybe I have my next question. Can you talk more about your progress in Taiwan and Southeast Asia regions, and also for the PLP plating? Because I think the industry now thinks that mass production of Taiwan foundries FOPLP, or we call co-op, will wait until 2029 or even 30. I think the development time for tech and manufacturing will be longer than expected. So how do you think about the mass production time of the FOPLP or co-op with a fine line space? Yeah, not the large line space for the done by the panel makers. I mean for the advanced process.
Sure. Actually, PLP, this is panel level packaging, we believe is ready to go for the large size of the AI chip packaging, right? As the people lay down in the panels 310 by 310 square versus circle, their effective area increased more than 60%, right? It's a bigger gain for the customer. It's especially for a large chip. Obviously, after people get a no to 310 by 310, we're probably very soon moving to large size panel. So we believe that's really a strategic step, and the Taiwan customer taking that direction. As to the ACM, I feel we have a very good product, ready for that product, and we're already putting in the market for their low pressure cleaning, bevel cleaning. Also, I want to mention that is our horizontal and rotational electroplating. It's really a solution for this panel level, right? And why is looking at the 20 millimeter packaging, used to be vertical, and you go 300 millimeter wafer, everybody turn to horizontal. And now you can see our panel level, we are probably the only guy providing this horizontal solution because of proprietary IP design. And as this year, March, we got a reward. I get a technical award from the 3D IC Inside the USA. So we believe, our strong position in this horizontal plating, we're positioning ACM very strong position for this future AI, PLP market. So we're, we see that as recently we reach our horizontal plating uniformity less than 5%. And I want to say we're trying next goal is less than 3%. So we'll maintain equal performance, panel square plating versus a circle, same level. That's really driving to the panel. As you mentioned about 2029 or timing, I think that's really depend on technology driving, right? And if customer can solving the all issue, they can speed up. If they cannot solving, maybe delay. So really, this is a market is driven by two manufacturer technology combined together. So I mean, with our copper plating, we definitely believe that's what be speed up, right? In the copper plating process, which is one of the major block, and for the people moving from 300 millimeter wafer to the panel level. And we're glad, this technology offered to the customer, enabling their the production line, and hopefully speed up their production. That's our confidence, and also we're engaging with the customer in the Taiwan.
Yeah, I know that you have technology leadership, you have real products and IP. I feel like the issue is that the ecosystem is not ready, so the customer might need to delay the co-op mass production timeline. And meanwhile, do you think that they're plating towards supplier from co-op to co-op? Will they still stick to the original Japanese and American supplier, or they could adopt new supplier for co-op? Yeah,
well,
from co-op for the plating one. Yeah.
I want to say, wafer level, we're engaging, right? Then you're looking at this panel level, I think we're a much better, superior, product, right? Wafer level probably will offer, equal, and this moment, I want to see that. But for the real panel level, as I mentioned, looking the last 10 years, nobody can do horizontal plating, right? We're the first guy announced the product. We can do horizontal. As I said, even today, we're about 5% uniformity. Our next goal is go 3%. I believe with a strong IP position, we should offer the best panel plating tool in the world. And again, right, that's really exciting, for our, I call it penetrating the global market, and is one of the key products we offer to enabling the technology for the customer. So we're very, I call it put effort on those product development. Plus, we also prepare additional other differential product and also enabling the panel level. And we're going to announce probably, in the end of this year, we're working on a new product too, and to further get into this market. So we're very excited about this panel level, right? It's a way to do because all AI chip got a size bigger and bigger. I mean, we have we're going to invest a lot in this product.
I see. Thank you so much. Sorry, I may have occupied too much time, but thank you so much for the details.
Thank you.
Thank you. Your next question comes to the line of Yangwei Lei with UBS. Your line is now open.
Hi, David. Can you hear us? Can you hear me?
Yes, please.
Thanks for taking my question. Just one quick one. Seems like your Q2 year-over-year growth, even for Asia, is still underperforming other like China peers. Any reason behind, and probably like due to different customer exposure? Thanks.
Good question.
David, I think the question was the growth maybe of ACM Shanghai's revenue or even ours versus some of the China peers. Maybe it was, what's the reason for the difference?
Between China, between US, or between with our folks, with other peers?
Maybe between ACMR, both US and China, and Shanghai versus other like China WFE peers. Thanks.
Versus China peers.
Oh, okay. I didn't see the other result come out, China peer. Obviously, looking at Shanghai, our revenue growth, it still looks good, right? And so I want to say we're confident. And also this year, as I said, we're coming to the moment of the multi-product. And the revenue will not much contribute this year. But with the next year, we see our furnace PCVD track, that contribution, right? And also we have a new product with cleaning and, continue expanding copper plating. So I want to say we still have a very good, confidence and also outlook for 2026. And this year, and well, Q3 very, very busy, and Q4 we have a couple slots open, but we think we'll be also, fill that soon. So in general, we still have a good confidence, we have good growth still this year.
Oh, thanks. Pretty clear. Thanks.
Thank you.
Thank you. Seeing no more questions in the queue, let me turn the call back to David Wang for closing remarks.
Okay, thanks, operator, and thank you for all the participating on today's call and for your support. Before we close, Stephen is going to mention our upcoming investor relation events. Stephen, please.
Thanks. Thanks, David. Before we conclude, I just want to give everyone a quick reminder, our upcoming investor conferences. On October 21st, we're going to present at the 6th Annual Needham Virtual Semiconductor and Semicap One-on-One Conference. On August 25th, we will present at the Jefferies Semiconductor IT Hardware and Communications Technology Summit at the Four Seasons Hotel in Chicago. On September 3rd, we'll present at the Benchmark 2025 TMT Conference in New York City. On October 7th, we'll present at the 17th Annual CEO Summit in Phoenix, Arizona. Attendance at the conferences are by invitation only. For interested investors, please contact your respective sales representatives to register and schedule one-on-one meetings with the management team. This concludes the call, and you may now disconnect. Take care.
Yes, thank you.